Oil has lost its upside momentum as investors have focused on negative factors. Markets are looking ahead to the OPEC Plus meeting. Meanwhile, the ruble has leaped into red. It remains weak against the US dollar, but unlikely to face a deeper fall. A sell-off wave in oil started on Monday as investors reacted to the downbeat manufacturing data from China. Besides, the tensions between the United States and Saudi Arabia raised more worries in the market. It's reported that Washington considers imposing sanctions on Saudi Crown Prince. The US intelligence report has found that the prince could have approved an operation to capture and kill journalist Jamal Khashoggi in the Saudi consulate in Istanbul. Today, the decline in oil quotes has accelerated due to the rise in the US dollar. The US dollar index is about to settle above the level of 91. Moreover, crude prices are pressured by the upcoming OPEC Plus meeting on Thursday. Investors expect the cartel to change the level of output volumes from April. It's possible that members of the alliance will agree to ease the current output restrictions and increase production by 500,000 barrels per day. Besides, if Saudi Arabia refuses to implement its voluntary cuts, the oil markets will face a surplus of 1.5 million barrels per day. Brent oil futures for May slipped far below $65 a barrel. Today, Brent is trading at $62.90. The main activity is concentrated near the 63 level, as the bulls are reluctant to give it up. WTI is following a similar trajectory. A sell-off that started yesterday pushed the quotes below $61 a barrel. Currently, the North American crude is trading in negative territory, although its pace of decline has slowed down. The lack of new driving factors should limit the bullish trend. In the course of the session, Brent is expected to consolidate it in the range between $62 and $65 a barrel. In case traders' expectations are true and the OPEC Plus decided to increase oil output, Brent may retreat to as low as $60. Analysts insist that $55 is the most justified price for Brent from the fundamental viewpoint. On Tuesday, the background is moderately negative. Commodity and emerging market currencies, including the ruble, suffer from the strengthening of the US dollar. In addition, falling oil prices weigh on the Russian currency. The tax payment period is over, while the risk of sanctions became more evident. In the near future, the United States should announce new measures against Russia in response to the poisoning of Alexei Navalny. In early March, the European Union will name those Russian officials who have come under sanction of a Navalny case. However, the ruble's reaction to the news background is very weak, as the sanctions will not affect the financial system and other important spheres. At the same time, the ruble failed to settle below the level of 74 against the dollar yesterday, although the fundamental factors were quite positive. This definitely signals a weakness of the ruble bulls. In case the global market sentiment deteriorates and the oil extends its fall, the US dollar may easily test the mark of 74 and 70. If the greenback breaks through this level, then its next target will be the level of 76. Currently, there are no fundamental reasons for the ruble to collapse. The geopolitical risks are the main factors to put pressure on the Russian currency. A new round of anti-Russian rhetoric is rising in the European Union, which may result in a new conflict. In particular, escalating tensions in the Donbas region may evolve into more confirmation. That's all for now. We wish you a profitable deal. See you in our channel with a new video in a couple of hours.